Greetings. My name is Eugene Dean, and today I have the privilege of speaking with Josh Stirling, who's the founder and president of the Insurance Collaboration to Save Lives. Greetings, Josh.
Good morning, Gene. Thank you for having me here.
Hey, it's a pleasure. So, Josh, tell us a little bit about what you're doing. What's this Insurance Collaboration to Save Lives?
So the Insurance Collaboration to Save Lives is a global nonprofit of insurance leaders working to engage and empower insurance companies, global life insurers, global disability insurers, global reinsurers who support those insurance companies to address the problem of excess mortality and morbidity. So the elevated rates of death and disability, to address that proactively by doing proactive screening of their policyholders to identify those most at risk of serious health concerns, attacking those folks in a positive way, and attacking the root cause of the problem in a positive way through intervention, medical care, lifestyle changes, basically to improve health, reduce mortality. Our goal, because this is a global crisis, we think it's important to have a global coordinated solution. Our vision is that we're going to save 1 million lives, doing it through the partnership with the global insurance industry. And I had the honor and good fortune to be invited this week to speak at the Bermuda International Long-Term Insurance and Reinsurance Conference, BILTER. A lot of your folks here in the island know that by its acronym, to speak about COVID mortality trends and what the insurance industry can do. And we met when I was on island, and had the opportunity to meet some leaders in government and business, and we're very excited about the opportunity for Bermuda to be part of really a leader in this global effort. And really honored to be on your show this morning and talk more about that.
So give thanks. So you talk about excess mortality.
Yeah.
So obviously you've been looking at data. Insurance is all about data and numbers and things of that nature. So what is it that you've actually been seeing in the data?
Yeah. So our team of actuaries and analysts, I'm once used to be an insurance guy, and then I went to Wall Street as a sell-side analyst. And so, we're all like numbers people, and we've looked at lots of charts. If you're interested, I could show you and your audience a couple of charts. But the headline, the simple thing to know is that excess mortality in the younger ages in the United States, as of so far this year in 2023, is up about 25%. That's really troubling. Overall numbers aren't quite as bad. There's some age groups which are less, but in the younger ages, like maybe that 15 to 45-year-old cohort, it's unfortunately quite troubling. And you don't know where this is going. It's hard to project the future, right? It's uncertain. But on Wall Street, I always used to know there was a stock aphorism that the trend is your friend. You got to follow the numbers. The current numbers are bad, and so we don't know. We hope they're going to get better in the future, but they're not good today. And that. And there's other data we could talk about. Disability, for example, is at record levels in the United States. This is a real tragedy. These are people whose families, their individual lives are affected. Their family life is affected as they have to manage the disability. And then the labor markets are affected because these people can't work, and that's one of the reasons we have low unemployment, and yet it's impossible. And it's very difficult to find workers. It's because a lot of people who are disabled. There's a lot of social, unfortunately, suffering, and the genesis of our idea, and this is what's bringing back so many leaders in the insurance industry together, is this sense that says, well, if this is a problem, and business exists to solve problems, we as a business, and it's particularly as an insurance business, well, we should figure out an insurance solution to the problem. And it hasn't always been the case in things like life insurance, but certainly in like health insurance or property casualty insurance or lots of other types of insurance, risk mitigation to reduce risk is central to how people run insurance companies. And so what we really think that a lot of companies can do is, instead of just waiting for folks to die and just taking passively the outcomes, which are unfortunate, why don't we go proactive? Why don't we make an effort to try to use very low cost blood tests and other types of health tech and screening. You could get really exciting with this, if you wanted to spend a little bit more money and use digital imaging or use sonograms on your carotid arteries. You could do a lot of really cool advanced technology, scientific things to basically figure out who are the people in our friends and communities and neighbors and our family who are at most at risk of having a catastrophic heart event. For example. I mean, that's it's some of the anecdotes in the news that led to the insight paired with the data and the actuarial approach, and then reaching into the science community to find the solutions, that leads to this conclusion, which says there is a problem, but, medical science is very advanced. And so if we can understand who needs help, who's got symptoms, whether they're maybe not quite acute enough to present in a catastrophic fashion, if we can find those folks before they have the crisis, before they have a pulmonary embolism, before they have a heart failure, before they have a heart attack or a stroke, these are people whose lives we can save, we can help their families, it's good for the community, it's obviously aligned with the goals of governments all over the world. And what's special about our group is that we're trying to bring a business solution to it, because we are a nonprofit, and we think that's the right way to do it, to get the entire industry together here in Bermuda, in the United States, and in Europe. But ultimately, we believe that the solutions that are sustainable are going to be, are going to be sustainable because they fit in sort of a capitalist way. But there's, if you can find a way for business to do well by doing good, that's going to be a sustainable solution. And the sustainable solution here is that life insurers who spend a little bit of money up front or earlier in the policy life to identify people who've got health issues, who get them care and treatment, they can avoid paying out lots of money on a death benefit. And, that's something that gets us excited every day. And we're really thrilled to find so much support for the idea.
Yeah, that's good. So when you're talking about that, what rings to me is the fact that this is proactive.
Yeah.
I know I personally see the wisdom in that. I just recognize that hasn't normally been the tendency. There's a lot in life that we just tend to react to. So where's the precedence for this? Like for an initiative like this? It all makes sense. It all sounds good, but where are some other examples of how proactive action has been taken to provide the best possible solution for the community at large?
It's a great example. There's a lot of examples of that in the insurance industry if you go back through insurance history, especially if you go into the fire insurance industry and the property casualty insurance industry. Most, I'd say most, especially in the United States, but I think this was probably true in London too, and in the United Kingdom. And maybe locally here too, although I don't know as much about the history of the local firms, opposed to the international ones. But in the United States, the vast majority of insurance companies were founded as farmer mutuals, where basically a bunch of farmers in a random rural area in Kansas or something, or Iowa, got together and said, well, we need someone here to insure our homes against fire. And so the communities came together and created nonprofits to insure themselves. As part of that, they would do a little bit of risk management, and say, well, we don't want to insure homes that are too risky. And if and you've had that creates pressure to try to get homes to be safer. However, really the grandfather of this whole thing, at least especially in the United States, but I think probably globally too, it's Benjamin Franklin. Benjamin Franklin, one of the founders of the United States, signed the Constitution, signed the Declaration of Independence, scientist, statesman, publisher. He was also the founder of the first insurance company in the United States, which is today the Philadelphia Contribution Ship for Fire. It was a fire insurance company to prevent against fire, which is the pandemic of the catastrophe of the 18th century, so the 1700s. But he wasn't content to just worry about paying for people's losses. So he said, well, actually, not only do we have to pay for people's losses, we have to create fire departments to put out the fires. And so, he created the first volunteer fire brigade, also in Philadelphia, in the 1700s. And, and his thought was that you should pair these things, insurance and firefighting. Over several hundred years, we've gotten away from that. There's different parts of the organization. But the idea of putting these things together make a ton of sense. And I would give you an example that's very similar for that. So today, on island here, a lot of people work for Chubb. So Chubb's global leader in high net worth insurance. If you're wealthy and you've got a beautiful home and you live in the foothills in California and it's very exposed to wildfire, if you have the right policy with Chubb, if there's a wildfire approaching, they will send a crew to spray your expensive house with fire retardant to make sure that, or at least to give it a fighting chance to not burn. They also want you to prune the trees around the house. and not have things that will lead you to catch the house. And they'll want you to have a roof that's not going to catch on fire and stuff like that too. But they will, if there's a fire approaching, they will send a crew to spray your house with fire retardant, a chemical that will keep it from catching fire. What we found in doing our study, both of the medical research, but then we also did a feasibility study of 29 members through our organization, volunteers, our friends and family, other insurance executives. We found 14% of our sample had 3 or more biomarkers of like elevated heart conditions. So like CRP for inflammation, troponin, or NT-proBNP for some form of either heart failure or heart damage, myocarditis or other types of similar things like that, or D-dimer relating to blood clots and thrombosis. 14% had 3 or more of those markers being elevated. The way I interpret that, and that's not, statistically significant, it was only 29 people, but it was consistent with the medical research. It was consistent with a lot of the anecdotes. It was consistent with the big global public health data, which led us to that conclusion we should test this. What we concluded was, gosh, maybe there's 14%, and maybe it's 5%, maybe it's 25%, but our numbers said 14. Of our friends and family and other people we work with who have serious heart conditions they're not aware of. Those people have a wildfire that hasn't completely caught fire, and we as insurers can still go spray their homes with fire retardant. And the savings from saving those lives, if you're a life insurer, $100,000, $500,000, $5 million, it just depends on how much coverage they have. The cost of testing them to find out what I just told you, we could do that for less than $50 a person. 100 or 150 for a very full set of tests to understand really what's going on in their health, and then give them that insight and direct them to care. Look at it like the insurance industry providing a little bit of like a second review or a second check on their medical wellness visit if they have a doctor. If they don't go to the doctor, this might be the only medical insight that they've had in years, and those people can be helped very cost effectively. And for those who have critical issues, subacute but like possibly emerging, that could turn into pulmonary embolism, which unfortunately are very common these days. Blood clots, strokes, things like that. These are people who can be treated proactively and avoid those catastrophic outcomes for them and their family.
Right.
There's also a lot of other things you learn about your health by doing this. Vitamin D deficiency. Most people have vitamin D deficiency. That was one of our big learnings. Huge impact on both heart health, immune health. Obviously, people know a lot about bone health because that's better understood or better known, broadly known. But long-term impact on like avoiding cancer, avoiding heart disease, all-cause mortality for most things are worse if you don't have enough vitamin D. Right. Very common, and easy to remediate. It's pennies a day of a pill. Similar other types of deficiencies, vitamin B6, B12, folic acid, all relate to homocysteine. Something we found about a quarter or a third of our population had a deficient, or I should say, deficient levels of those supplements, those vitamins, which then led to too much homocysteine, which is a toxic substance in your blood that leads to heart attacks and artery and problems in your arteries. Right. And so and people don't know this, but for $20, if the insurance company pays for a test, they can find out, right, and then they can take a supplement for pennies a day and avoid this, what could be a catastrophic heart failure, and whether it's in, 2 years or 20 years, that's a massive opportunity to improve the world in terms of saving lives. And it's a massive opportunity for insurance companies to save money.
Right. So basically, I guess this innovation and creativity and proactive nature is something that's common in the industry. So how do you see Bermuda playing a role in all of this?
So at least since the 1950s or 60s, Bermuda's been the global leader of insurance. We started with captives, then it became the hard market of the 80s, then reinsurance in the 90s, and then more reinsurance in the 2000s, and then more recently it's been moving from property catastrophe and specialty lines in the P&C to life insurance. And what's interesting about life insurance here is it's mostly annuities, pensions, asset intensive for the people who are very focused. It's more about savings products, better management of savings products that are insurance related. What we're talking about here is life insurance, which is mortality. Death, disability, bad things happening, insurance for that. Bermuda doesn't do too much of that. They do some. I think it's a huge opportunity for Bermuda to write billions and billions and billions of dollars in new mortality business if it takes the leadership and says there's a global health problem, which can be solved by the insurance industry, which we can help coordinate, organize, regulate, and deploy. And I think ultimately, I was a stock analyst and I used to cover insurance companies, and people would always talk about the class of 1992 is Renaissance Re, the class of 2001 is, Arch and a few others. Class of 85 was Ace and Excel, now Chubb and AXA. I think you're going to see a class of 2025 or 2026, which is going to be a whole bunch of new startups here in Bermuda that are going to pair science of how do we save lives with what Bermuda's always been best at, which is the capital and structuring and regulation of like the actual insurance and reinsurance part of this. They're going to pair those things together and then go out across the world to help insurance companies all across the world reduce their mortality in their policyholders, save money, and save lives. And that's, I think, a really interesting opportunity. I've started talking with people in the government here in the United States about that. The industry is obviously very interested. And it could be a good thing for the community. I mean, the possibility of hiring lots of scientists, new types of capital coming on the island to do this. Certainly a new business for accountants and actuaries and lawyers, the core of a lot of the Bermuda offshore. A big opportunity. And the reason Bermuda is a special place for that is it's so nimble. It's such a thoughtful group of people who all know insurance. And ultimately, I know that the heart of the island is in sort of helping provide this additional value and leadership, globally, through the insurance industry. And I personally think that the next frontier for the growth of insurance globally, especially in this life and disability space, is going to be moving from risk transfer, buying a policy to protect your family, to risk mitigation. Your policy is going to help you reduce your risk of dying. Mm-hmm. And I think, working with Bermuda, the regulators, the, leadership of the island, the business leaders that are here, the visionaries and all the sort of the talented service providers, accountants and actuaries and lawyers, I think there's an opportunity to really move this very quickly. And I'm excited about the conversations we're having.
Mm-hmm. All right. Well, give thanks. That's great.
Absolutely.
So just for our audience, right, you've talked a lot about this increased mortality, right? Let's look at some of the data.
Oh, sure.
That you've seen and just so that people can really come to terms with the realities of what's going on right now, So
I think Gene, I think I would love to do that. I mean, it's a terrible topic. But I think, we have probably 3 or 4 slides if we had 3 or 4 sets of data that are probably most relevant to people just to know the factoids.
Right.
Or not factoids, but, a few key points. I mean, I gave you the headline already, which is that mortality is elevated. On this slide, you can see, and hopefully people at home on their computer can zoom in a little bit because it's kind of busy. We didn't create this slide. It's from usmortality.com, which is a really professionally done website. It uses US CDC-based data. They update it weekly or thereabouts. And so what you can see are these peaks. These are death rates. And these are death rates relative to some historical benchmarks they calculate. The blue line being the actual, and then these historical benchmarks being these other color codes. And what you see is if you look back over the past couple of years, there were the peaks in 2001 and 2000 and 2001 and 2002, and they were typically seasonal. With usually around December was the worst because the flu season, whether it was COVID or other stuff, was all sort of coming together to sort of cause issues at those periods of time. But if you look at the most recent couple of months, and you look just at the blue line relative to and this is sort of the box that we zoomed in on, what you see. And this is calculated, and we didn't do these calculations. That's the website's calculations. But conceptually, what they've done is they've taken all this data and adjusted so age standardized with a standard population, so that it's sort of like an apples to apples comparison. And it doesn't matter if you have fewer older people this year versus last year, that kind of thing, because those things change over time and distort the numbers. These things, adjusting for that, get to something like, it says 6.8% excess right now in June. Perhaps it's trending down. Maybe it's more like 5% right now. However, it's also seasonal, and so maybe that seasonality is just going to revert over this fall. Certainly, there are some people that are worried about COVID right now. This fall, there's a lot of stuff in the news about that. So I wouldn't be surprised to see those numbers pick up again. But the most recent data seems to say excess mortality call it 5 or 6% elevated from what it should be. If we go to the next slide, or if I take you to one more chart, if you dig in, and I illustrated this because I think it's the most important thing to know, but I'd love to show you the chart on it, which is, if you look at actual CDC data, and this is work we and our actuarial team in our organization did, they're all volunteers. I don't want to, we're just, these are actuaries who have day jobs. We're also spending a ton of time helping our group, right? So, and so that's sort of, I don't want to overstate it, but world-class mortality experts who do this for a living, we're using CDC data to see by age, and that's what the x-axis, across the screen horizontally shows, the percentage increase in death rates as compared to 2019. And so what you can see is, if you look at the colors, the gray and the orange, the brown at the very low levels, those are basically 2018 and 2019. They were flat. There was nothing going on. There was no excess deaths. And then in the orange, you can see the sort of, or maybe it's pink on the screen, you sort of go to 2020 and you can see that basically there was about a 20% excess death rate for every age group, and it was pretty much flat across the ages. And then in 2021, what happened, and this was what got our attention originally, was all of a sudden young people started dying. The working ages, this became, instead of being a uniform increase, the big red line in the middle, in 2021, the highest death rate, the highest increase in death rate in 2021 was in the 40 to 45-year-old age group. Not obvious why that would be. Old people are affected by COVID. Younger people weren't, to the same degree. I mean, there's a lot of science behind that. So this was sort of a surprise, but this is what drew the attention, in particular because the life insurance industry tends to insure somewhat younger people, right? More working age people, or people who tend to buy life insurance. In 2022, thankfully, it generally got better, but you still saw a similar pattern where actually the worst death rates were in the sort of this, it looks like 30 to 35 or 30 to 45 thereabout ages. This is the reason it's important to talk about this still, is that 2023, and this is what the blue line is, and it's dashed and it's to emphasize it, is that we're still seeing a peak, and it's about 20%, maybe 25 in some ages, a peak of death rates running from the ages of about 15 to 45.
Right. And just to be clear, the brown line at the bottom is 2019.
Yes.
So where these other lines are shows it's that much elevated. So it's over 20%.
It's over for younger people right now. It's over 20%.
Wow.
It's also up for the oldest people.
Right.
And then there's some reason. There's a lot of theories on this, but none of them we don't have proof in any particular cause. It seems like it's down a little bit for the middle older ages,
right,
the sort of the pre-retirement ages. Possibly that's because a lot of those people who are sicker already died. But there's a lot of confounding effects when you start to try to analyze these things and come up with precise answers. But what we know is that this is not normal, because if this was normal, to your point, all these lines would be flat and they'd pretty much be stacked on top of each other, plus or minus 1 or 2%. But that's not what you're seeing. You're seeing plus or minus, seeing pluses for almost every age, for almost every period of like 20% or more.
Right. Okay.
I mentioned disability. This is also important. And this is something, again, from US government data. Every month, the Bureau of Labor Statistics, who reports on they report on the economy and other things, but including the unemployment rate. That's what they're most famous for, is they do a poll, a phone poll of I think it's like 20 or 50,000 people to try to figure out what the unemployment rate is every month, who's working, who has a job. They also, in that same polling, ask you, do you have someone in your household who's disabled? And there's specific criteria about you can't bathe yourself, you can't feed yourself. There's a long questionnaire about whether you do or don't qualify. What this data shows, and they only started asking this question in 2009. But what it basically shows is this rate was relatively stable for most of the past 15 years. However, starting in 2021, it's skyrocketed. This is a pretty stable data series. It came down a little bit during COVID. A good explanation for why it declined during COVID is that people who were disabled disproportionately had COVID mortality. They were more likely to die. And so therefore they were no longer in the data set as disabled. And so the real benchmark for probably post-COVID recovery should be sort of lower than the average. But if you just look at the average and then you compare the average of say the 5 years before to where we are today, which is at record levels, you're talking about a couple of million people who are disabled. Wow. If you add to that to the maybe 2 million people who've been excess mortality over the past 2-3 years. If you round up, it comes close to 2, since the beginning of COVID. You're talking about somewhere between, maybe, depending on how you measure all these things, because they're a little bit imprecise, you're talking maybe 5 or 6 million Americans who are either dead or disabled since the beginning of COVID. And that's not to say we know for sure what caused all of that, whether it's COVID or something else, or secondary factors, or lockdowns, or suicide, or fentanyl. There's a lot of different contributing things. Traditional bad health, that's at its core a big part of everything that happens. But the scale of the tragedy is really mind blowing when you start adding up the numbers. And of course, these are U.S. numbers. For globally, you're going to double, you're going to do 10 or 20 times more. Given global populations. If I was going to show you, because you asked about statistics, we did just a little bit more. We did a little bit more on different types of deaths, if you'd be interested. Cardiac disease, for example. Cardiac. This is again CDC data. These are busy slides. If you've got because there's a lot of numbers on them, but they're by age for a couple of years. Again, our actuarial team pulled this from the CDC. These are the rate of death per, for different types of causes of death. And what you see for the heart disease, for between 25 and over, is, this is just up for every year. It's up, and it's up. These are reasonably large numbers, the 15, 20% in most cases. Some are higher. It's not on the slide because we thought it was sort of distracting. And we were focused more on we were mostly focused on the insured population, which is typically older. But if you were to do this slide for people that were under the age of 10 to 14, there's shockingly large numbers of heart diseases that come through this data set. I mean, up 50, 70%, 100%. Those are the kinds of levels. The data is thin, so it's, because it happens so infrequently, but it's a powerful signal there's something going on with heart health. Cancer is a little bit less clear. We mention this not because there's a clear story, but because it's a big, important, large cause of death, and people think about it a lot. Certainly, we all know anecdotes, but it may be that cancer is more likely to be treated. And so people who have cancer haven't necessarily died yet, right? And so this is tracking deaths. And so you work your way through the system. I'd mentioned these. I'd mentioned the next slide. Again, a few other selected pathologies, strokes, diabetes, kidney diseases, liver. The liver is shockingly high. The strokes, these are some 70% increases in liver disease. I mention these because, I'm not a doctor, but I've learned a reasonable amount about medicine and science. I'm still learning, grasshopper, I'm still learning. I'm a grasshopper. But the body is a complex system. Blood disorders link themselves both through things like the blood and the heart, but secondarily through many, many other organs. And so things like the kidney, which is highly related, which leads to diabetes, or it's either causes problems which either causes diabetes or results from diabetes, or the liver, and then strokes, obviously, which are blood vessels in the brain. These are all symptoms that are very closely related to blood and cardiac disorders. They're just the similar types of problems showing up in a different organ.
Right.
That is a lot of blood. And so it's very notable that young people, liver disease is up so far. Because it's not like it's not like alcoholism is, for example, primarily a dramatically changed new event that's driving liver disease. But it could be that what's linking all of these patterns together is heart disease, which is, heart and blood disorders, which if I were to skip to our pilot, what we found, we did a study with our group of 29 people. We found 93% of the people, and this is friends and family of our efforts. It was insurance executives and and wives, and sometimes their kids, and other people who are volunteers in our efforts, actuaries, and so basically they're mostly employed and mostly pretty, it's probably disproportionately educated group. But health-wise kind of looked like America. It was 2/3 people who didn't think they had anything, but it was pretty average. It was an average group, most people, a majority were vaccinated, but not everybody was. It was sort of it was a range of different health factors. What we found was that 93% of people had an abnormal blood result on something. Now, we tested a lot of things, and so maybe you're always going to have something that's abnormal outside of ranges, and so you don't necessarily draw a really adverse conclusion from one result. It's more like something to investigate. But 76% of people had had some signal relating to blood or cardiac issues. And so this whole like, boy, there's an investigation here. It could be blood or cardiac. Maybe we could be treating blood or cardiac. That's absolutely confirmed. And if you were to look at this, if we would do one more than a majority had 3 or more abnormal markers. And so a majority of people really probably that we tested among a very healthy group of people, working, educated, generally didn't have a lot of pre-existing conditions they knew about. These are people we can help, and 34% had more than 2 cardiac findings. Cardiac inflammation, HSCRP, cardiac, basically signs of either heart damage or heart failure. So troponin and NT-proBNP, or the thrombosis or blood clotting. The D-dimer. These are the things we were noticing. And if we were to go to, this is a busy slide. This is a busy slide. But I think, what we learned from this was that, there were 14% of our group, and that's what we show on the left, who had possibly signs of serious adverse, heart-related conditions. This is something that the insurance industry can save hundreds of millions of dollars, billions of dollars, if we proactively go out and in a very positive way, do basically our own public health effort for our own policyholders to go find these people and get them care. If you've got blood clots or you've got like heart, heart conditions, you need to be managing that, and like there are drugs you can take, sometimes aspirin. It's as simple as that. I'm not giving medical advice, but our medical capabilities as a society are very advanced, but they're not deployable if you don't know that you've got a problem. And if we can help people find this problem, and the insurance industry can pay pennies per policyholder, ultimately, really a very small amount of money for every dollar they save. It's probably $100 per policyholder who agrees to sign up for the test. But every time you save a life, you're saving $100,000 or $1 million or $2 million, depending on how much insurance they have with you. And so if you can save 1 life out of every 1,000 people you test, or 1 life out of every 5,000 people you test, the insurance industry is going to make money off this. Or at least they're going to save money and they're going to break even and cover their costs. And whether it's for marketing effort, marketing message, saving lives just because it's the right thing to do, or this sort of actuarial financial risk savings of like, hey, it'll be good. The CFO will like it. We're going to make, we're going to do well for our shareholders by helping, we'll do well by doing good.
Right.
Either way, there's a lot of synergy here that, is really unique because Bermuda is just such a innovative place around insurance, the Silicon Valley of insurance. It sort of feels like this is the kind of place that you could really build something like this and make it a global effort because you guys are the global crossroads for insurance.
So that's really great data. Kind of daunting somewhat.
It's depressing. Yeah. It's sad. It's sad, but at least there's hope is the way we think about it.
Right. But it's great that you have latched on to a solution, So you presented at the Builder conference. You've spoken to some people in government. You've met with some people in the community. How has this been received thus far?
I think people are really excited about the solution. I think when you get to like the brass tacks of like deploying this kind of thing, there's going to be 100 questions and things we're going to have to work through. We in partnership with the companies, the government, the vendors, everybody who's going to be part of this global effort to lead and do the right, do well by doing good. But the spirit of it, everybody loves. Whether it's commissioners in the United States, whether insurance commissioners in the United States, whether it's government ministers here, whether it's, leaders of the financial community, the senior executives that, we spent the week here in Bermuda, both meeting, presenting to in the 400 attendees at Builder. We were so honored to be invited to come and speak at that conference. But then also a lot of, even more important, the one-off meetings we're having, with the experts, with the C-level leaders who are the kinds of people who could actually help us deploy this or raise capital to do this or bring their companies to be part of the solution. There's a lot of interest in the possibility of doing something like this. And so, I think, we're not super prescriptive, it's in the name. It's the insurance collaboration to save lives. We're trying to get everybody to collaborate. And so ultimately, I think it's going to be, what the 5 or 10 big insurance companies who decide that they want to be really leaders in this effort, sort of the founding partners, they come together, the vision that we collectively build, going back to Benjamin Franklin, everybody gets together and then agrees and signs off on like the Constitution after talking about it a bit. We're still working through that process of like getting the right people in the room. But I got to tell you, people are very excited about it. And, it's not every day you get a brand new idea that could really be as big as this for the insurance industry. We're talking about moving a big part of the insurance industry, life insurance, into risk management from risk transfer. This could dramatically change and grow the life insurance industry. And if Bermuda's leading, this could be a dramatic change in the number of like jobs on the island, the number of, the amount of capital that's raised to deploy here, the kinds of jobs, bring science and medical, to do research and other types of things to help advance this and make sure it's science driven. It's a very interesting way of taking what's great about Bermuda and then using it to solve a global social problem in a way that's going to be financially remunerative, for the island and for for the companies that decide to do it. And so that's something that gets really intriguing, that gets people excited.
Mm-hmm. All right. So just kind of in closing, right? We encounter things on a regular basis. We see data, we see headlines in the news, we read things in the newspaper and things of that nature. But like, what really drove you to latch on to this initiative? Why is this so important to you? And why do you feel it should be important to so many others?
On a personal basis, I was blessed to be successful early in my career, and I had some chance during COVID to think about what I could do in the second half to make a difference. At the same time, I was horrified by some of the suffering I saw through COVID and everything that it sort of went through, and I just, when I started and then finally, I spent 25 years in the insurance industry. A lot of that as an analyst or pretending to be an actuary. I'm not, but I've done like a lot of actuarial stuff. I'm a nerd. And so I was looking at data for throughout COVID, it was like a thing, like looking at data, trying to understand what's going on. What's the patterns, and as you do that, someone who cares, someone who's trying to make a difference, and someone who's basically an insurance statistician at heart, you start to see these patterns that are just terrible. And then you realize, I was working in InsurTech at the time, you realize this is the point of business, which is that we exist to find problems and solve them. And so the idea was, well, what should we do to tackle this problem? I believe in business. I believe in insurance. I believe, we as an industry exist to help, care for our neighbor, help and provide for the future. And hopefully the highest and best use of insurance is to reduce risk so that you don't have to, so that you don't have the loss. And it became obvious to me that for all of the challenges we face, we could manage many of them if we would just address them proactively. And if I could end with, was we went down this journey and we decided we were going to create a community of people, and we were doing this nonprofit, and we were looking for like a little bit of a patron saint, and we found Ben Franklin, who founded the first fire insurance company. He founded the first volunteer fire brigade because he wanted to put out the fires. So insure your family and then also prevent the fires. We also found this great quote, which was, instead of cursing the darkness, light a candle. And what we are trying to do is light a candle, take a candle, and have the global insurance industry light candles all over the globe to help improve health and reduce, and whether ultimately it's reducing lifestyle diseases through people doing a better job managing their health to avoid the things we all kind of know are like bad for you over time. But with the right set of behavioral help and little nudges and things like that, maybe we could do a better job for our families of caring for our health, or managing the things which drew our attention, which is acute cardiac and blood-related things, which seem to be at the core of a lot of the excess mortality and morbidity we're seeing. Either way, we're going to be able to sustainably make a big difference, and I think create a lot of shareholder value or financial value and community value by doing it. And that's why that's why me and a whole team of other volunteer insurance leaders are spending a ton of time on this, and we're looking for partners who want to help.
Yeah, that's really powerful.
Thank you.
So if somebody has seen this and wants to get involved in the initiative, how would they do that?
Well, so the best way to do it is find us on LinkedIn, Insurance Collaboration to Save Lives. Follow us there if you're an insurance leader. If you're not, we have a website, insurancecollaboration to savelives.org. I'm Josh at insurancecollaboration to savelives.org. And you can find us, and we'll do our best to keep up. There's a lot of people reaching out. We also have if you register online on our website, it will automatically send you a copy of our deck, like our presentation, which has most of this data in, that we recently gave to a Society of Actuaries conference in New Orleans and are we giving. And so, if you're in the insurance industry, if you're in the media and you're in the medical community and you want to be part of this, we have medical advisory team, we have marketing people helping us, we have insurance agents helping us, we have obviously a lot of actuaries and like insurance leaders. We're a collaborative nonprofit, and so if people are interested in helping, we're interested in talking to you, and we'll figure out a way to make it, to have you be part of the effort.
Well, Josh, this has really been a pleasure. Thank you very much
Thank you so much
for sharing your experience. It seems like a really great initiative that can bring a lot of value, both socially and commercially. And I really hope that people latch on to it and you're able to go from strength to strength.
Okay.
And anyone who's watching this, I really encourage you to share information about this. If you know anyone in insurance, let them know that this initiative has happened. Saving lives is very important. Obviously, it's something that we recognize when it hits close to home. And a lot of us have experienced that over the past few years. So again, thank you again, Josh. Thank you everyone for watching today. And hopefully this becomes one of the next great things for Bermuda.
Thank you so much, Eugene. It's been an honor to meet you. I appreciate your time. Thank you for all you do.
Thanks.
Okay.